Hello everyone and welcome to my channel. Today I want to talk about pivot points. Pivot points are very important technical analysis indicators. Pivot points can be used as entry points for new trades or as a close signal for the existing ones, or maybe a signal to close partially and just keep the rest of your positions going. That's all depends on the strategy you're going to adopt. There are different types of pivot points with different mathematical formula or simply using previous highs and lows. We're not going to discuss the mathematical part and technical part of the formulas, but you can see here at the moment I have the traditional pivot point uh, on the chart. You can choose between Fibonacci, Woody, Classic, DM, Camarilla. Just, I'm going to switch to Camarilla so you can see what's going on here. You can see the distances are shorter. So the strategy and trading setup that I'm discussing here is not going to suit where if you use Camarilla. And because in Camarilla, personally, if I use Camarilla, I just ignore anything between S2 and S2 and R2, and I just go above those points. Anyway, that's my personal preference. Let's go back to the traditional. You can see the distances are a bit wider, and that's because of the different formula. Okay, how to trade pivot points. The following scenarios work with the traditional pivot points for the and sorry, that should be full stop for the Camarilla version. Normally R and S are closer to the price as I discussed. Okay, so trading setup one, not so strong trend. This is just just it may be not so strong trend anyway. Open price is between R1 and S1. So when you wake up, you see the price is here between S1 and R1. So what should we do at that situation? We go long when the price moves back above S1 after going below S1. So it says, if we go below S1 and then go above, then we can go long. But this is not gonna last that much, so you can see that it just reverts here anyway. Normally we put the stop losses, one support or one resistance away from when we open the price anyway. Um, for going short, wait for the price to go above R1. So let's go back to one of these. This is just, you can see, this is very nice. When we reach to R1, it's actually reverted back and it worked as a reversal point here. Here you can see the one that goes above R1. So this is the scenario number one, but for short. Wait for the price to go above R1 and then when it moves back below R1, again go short. Profit targets will be P, S1, S2, S3. So you can either open few trades with the take profit at these levels, or if your broker allow you, just open a big one and close partially as you go. So here the price gone above R1. Then when it goes back, you open a short position here and put the target first one at the P here, pivot point, again S1 here. So you can see nicely we had two good position closed. And when, as I said, when you put at R1, open at R1, your stop loss will be R2 anyway. which here is not going to be hit, and you still in profit for the rest of it. Trading setup two, very trendy markets. Normally, when we are between R1 and R2 for the bullish market, buy if it goes below R1 and above R1 after going below the R1. Okay, so for example, if he's here, the price goes up, then again back up, then you should go line. Let's me just check to see if we can see such a thing. Here, for example, we are going above R1, but going below, then again goes above R1 before going to pivot point. So here another buy position with the R2 take profit. We can see that we nicely gone to the next, sorry, I'm just opening here now. Okay. Here you can see a signal buy and it goes nicely to the next resistance point. Yeah, this is very important how you just set up your trades. So I have option for going short there as well, and also the other side when we are below S1, between S1 and S2, we are in a very trendy bearish market. Again, you have two opportunities to go long and short. I'm not going to just find all of those on the chart, and just I want to short keep this video short. Trading setup 4, this is high profit probability for a trend reversal, and that's when the price is above our target. Again, I should mention that this setup is only for the traditional ones. For Camarilla one, it's different. So this R2 maybe R4 for Camarilla if you go that way. Buying can be risky because it's gone to R2 now for the traditional again. Wait for the price to go below R2. As soon as the price moves below R1, R2, oh sorry, that should say R, R, R2 again. Okay, go short. And then put the stop loss above R3. And the other side, again, high probability for trend reversal when the open price is below S2. Just for this one, I'm going to go back to see if we can find any of these. Yeah, just here at the end, you can see we are below S2. So that's here. We are below S2. Selling could be risky at this level as the price has opened with a big, I shouldn't say gap, with a big move down. Okay, so we are below S2. Wait for the price to go above S1. When the price moves above S1, buy, and then put the stop loss at S2. So here we wait. If it goes back up, again we buy. But what if not? The other side will be just going short again, but if it goes above this 2 and again goes below this 2, then we go short and we put the stop loss at this one. So as you can see, pivot points are working perfectly. You can use other pivot points, like you can just use Fibonacci numbers, or just let me throw one of the Fibonacci numbers here. You can see Fibonacci numbers are also very nicely working. I'm just going to delete the pivot point for a second. You can see we have very good numbers at zero point 0.5. The price gone back again, back down again. And yeah, I have another videos talking about Fibonacci. I just want to say that you can use even Fibonacci numbers at your pivot points, but if you want to use just the uh, pivot point indicator, you should just go here and type for pivot points and choose the pivot point indicator and add it to the chart. So yeah, the main point of using pivot points is to find where the price will reverse. You can see here at the resistance, at the pivot point, at the support. It's very nice. It's very high chance to just reverse at those points again. To show you how important is the previous um, resistance and support levels for the future trades, I'm just going to delete these for now. And I'm switching to Renko. Okay, so I have to go back to daily. Okay. The importance of the pivot points, if you, for example, here you can see 10th of July, 16th of September, 16th of December, 3 points that actually works very perfectly as the support, as the yeah, support and also resistance levels here. Or even let's back to one of these. You can see if you just draw a line, you can see that many times we just hitting the same numbers. You can see these two again, same level, same level. So the resistance here again, you can see this top, this top, this top, and also then it goes to this and this. So it is very important to know the previous resistance and supports, but that's another video, and I'm not going to discuss that one today as well. So yeah, that was all about using pivot points. Just it highly depends on your trading style, your trading strategies to use which type of pivot point and how to trade it. If you are going against the trend, you should uh, go and just use this scenario 5 and 4 to go against the trend, because at that those points there is high probability for trend reversal. And if you are a trend follower like me, then you can use the other ones and also always ignore the one that is against the trend. Just go with the one that in the direction of the trend. I hope you learned something today. Have a nice day. See you later.